Good morning, my name is Brian Johnston, and this morning I'm doing this video and talking about business management. The account started out as you remember, and we won't show it again, at $5,000 at the 7th of this month, and the current sales are 6,853, which means the current is 100% on the equity sale with the drawdown. So if we liquidated everything in the drawdown, we would have made 100% on our money for this month right now. But why wouldn't we liquidate all of it? Because I want to talk to you about interest on your money. See, you have over 10,400 on the Australian dollar earning interest. So this month alone on these two, you're earning over $30 this month. Times 12 is $360 a year on interest. Now, no other business in the world using other people's money pays interest. And here's another 21. So these current interest in the swap interest, if these go into profit, this interest becomes ours, our money. Great business. Look at the drawdown, and once again I'll reinforce the thing that always before we take profit, although I took profits here just to show you, it was a bit less than you could have made, but just to show you that after taking the profit, the drawdown has remained very, very favourable to our account. So we've made 100% on our money and 6,853 sales. Let's think about some possibilities in using the hedge and looking at what actually happens. You notice that we are on the Australian dollar, we are actually moving down. It'd be interesting on Friday, on Monday, to see where we are with the bosun's line. For instance, if we were down here on Monday with the bosun line, we would assume that we have lower lows, lower highs, and at the moment it's looking like these lower lows have been coming in. So the Australian dollar might be devaluating and going down a little bit, but it should presumably this week come close to reaching the bosun line. This is the last week's Friday close. Now, by position averaging, and we'll come back here to the sales, and I want to talk to you a little bit about these, because as we take in new sales at a lower low, put our landed costs in, our limit orders in, and we'll do that now. These limit orders currently, what we'll do is simply go to new order, and it's the Australian dollar, and we're going to, before we go there, we're just going to look at the price, and the price is 10441. So I'm just showing you how we do it. One. I think that was it, just by memory. We'll have another look at it. Place. Now we could put in at the same time a take profit on the highest high, but I usually wait because this is only limit orders until they become orders, and then I put the take profit in, usually at the bosun line. But we want to keep this open for a while, so we'll change it to the month. We'll leave it here, but we'll just put it in. What have we been wrong? 101. Now we didn't put the 4 in, so we're looking at lower lows, and maybe it'll drop a little bit, so we'll leave that for a sec. And we'll put in our highest high, which is 107.11, and we'll just do that new order, and we're going to do another limit order, pending order, and we'll do a sell limit, and we'll just use Bolson's line of 1. We'll put 107.07 just to have a look at it, and we'll alter this to next month. Okay, so what we've done is we've just put in 2 new limit orders, and we'll just flip over and there they are there. They're down there. So supposing we made a mistake on that one, which we did, and we put in 104, we should have put 10441, and now the same as if we'll watch, and if any of these come on, we'll see well before the order's actually placed, we'll see a little indicator showing us the orders. Okay, now look, let's talk about the interest paid, swap interest. Why would we get rid of this when this drawdown, which is controlled, is controlling at $1,500, $51 this month, times by 12 is $560 you're going to earn. So the drawdown we're using for our advantage business, once again, when we make sales, our sales to stock equity turnover goes to our favor. So with 6,000 sales, 1,000 of equity, we're about a 6-to-1 turnover factor, which is pretty high. Okay, so our equity is growing, our drawdown is reducing. Why should we change it? And then we'll add more sales. Just talking briefly about rollover swap interest paid at New York on the Wednesday, depending on your broker. Most brokers pay triple swap on Wednesday at New York time 5 p.m. There's usually a run-up, and sometimes after there's a run-down. Later today there may be a run-down on price. I'm quite happy with that drawdown. That account history, the sales for the month against the opening deposit. Once again, have fun trading. I trade the forex as a business using straight out business management techniques of controlling your drawdown, your overdraft facility, using other people's money to make money, also on the interest. Always have this account being a cash interest bearing account, and look, it is. And also notice how many positions. If you go back to the demo mode, you'll see that 3, 4, 5, 6, 7, 8. I finished up with 8 positions on. Look at the account size that I've had. It's pretty low for a, it's in tune with the 5,000 account balance. Now we're at 10. We're at over 10,000. We can up that a bit on our sales, but I'm keeping it the same. I'm happy with my 5%. Look at the drawdown, it's going down. Look at the equity, it's moving up. Why should I change that? Bye for now from Brian. Have fun trading. There's no right or wrong way to trade. I'm just showing you business management, how I manage my drawdown, how I run my account as a business. Business of making money, making sales, controlling the drawdown to the equity, and before I take a sale I wait for the drawdown to go down to the total sale I make so the drawdown goes down. Bye, have fun from Brian.